Welcome back to BEM Academy. I'm Ege. In the last episode, we have covered when and when not to trade. And today, we'll cover the events that actually make the market move, the economic calendar. It is the single most important schedule a trader will ever read. Miss a major release and you can watch a trade going down in several seconds. But if you use them correctly, you're steps ahead of every other retail trader. So, let's begin. Here is what we'll learn today. 1. What the economic calendar actually is. 2. The high impact events that move every market. 3. How to read forecast versus actual. And finally, 4. Whether you should trade the news or avoid it. So, let's dive in. The economic calendar is a list, a schedule of every economic data release and central bank announcements, organized by date, time, country, and expected impact. Inflation prints, jobs reports, interest rate decisions, central bank speeches. Every release has a forecast, what the market expects, and an actual number, released live. The gap between them is what moves prices. Markets don't move on data, they move on surprises. If the forecast for US inflation is 3% and the actual comes in at 3%, barely anything happens. But if it comes in at 3.5, traders rush to reprice everything. In seconds, hundreds of pips can move. Currencies, indices, gold, all react. The unexpected is what creates the move. The calendar tells you when to expect the unexpected. 4 events you absolutely cannot miss. NFP, non-farm payrolls. The first Friday of every month tells you how many jobs were added in the US. CPI, Consumer Price Index, monthly inflation, drives Fed policy expectations. Third, the Federal Reserve rate decision, 8 times a year, the most powerful event in trading. And GDP, gross domestic product, quarterly, tells you if the economy is growing or shrinking. These 4 move every USD pair and every US index hard. Beyond the Fed, 3 other central banks move global markets. First, the European Central Bank drives euro pairs. Second, Bank of Japan drives JPY pairs. And the Bank of England drives GBP pairs. Each meets roughly every 6 weeks, and when they speak, their currency moves. Always check the calendar before trading any of these pairs around meeting dates. Every calendar uses 3 impact levels: red, high impact; yellow or orange, medium; and finally gray, low. As a beginner, only red matters, filtering everything else out. Why? Because low impact events barely move prices. You don't need to know that Norway's manufacturing index came in slightly above forecast. You need to know NFP, CPI, and Fed releases. Stay focused. Every calendar entry has 3 numbers. First, previous, what the last release showed. Then, forecast, what economists expect. And the actual, what the number actually was. The reaction comes from actual versus forecast. Bigger gap, bigger reaction. Actual higher than forecast for currency positive data. The currency strengthens. Lower, it weakens. Simple rule. Learn it once, use it forever. 2 approaches to news event. Approach 1. Trade the news. High volatility, big opportunities, high risk. Spreads widen, slippage spikes. Only for experienced traders with a tested plan. And approach 2. Avoid the news. Close positions 15 minutes before the trade. Re-enter once dust settles. Boring but professional. For most retail traders, avoiding is winning. Don't trade what you don't understand. 3 free sources every trader uses. First, Forex Factory. Clean, fast, the industry standard. Second, investing.com, slightly broader with charts and news context. And your own broker, most MT4 and MT5 platforms have a built-in calendar. Pick one, stick with it. Check it the night before and again in the morning. And now, 4 pro tips. 1. Check the calendar every morning before you trade. Non-negotiable. 2. Set alerts for the high impact news you care about. 3. Never have positions open through NFP or Fed releases unless that's your strategy. 4. Wait 15 to 30 minutes after a release before entering new trades. Let the dust settle. Now, here are the 5 things to take with you. 1. The economic calendar is the schedule of market moving events. 2. Markets move on the gap between forecast and actual, not the number itself. 3. Only red impact events matter to most retail traders. 4. Pick one source and check it daily. And 5. When in doubt about a news event, sit on your hands. You now know the schedule the entire market watches. Apply it on every single trade of yours on every single day. In the next episode, we'll leave the news behind and move on with the charts. Bullish versus bearish candles. The visual of trading. And now, if you're ready to put up what you learned into practice, BEM Funding helps you do that. You take the trades, BEM takes the risks. I'll see you in episode 10. Take care.